And so paying cash is convenient, it's quick, but I would make the argument over your lifetime, because of opportunity cost, you're missing out on a lot of the cash benefits. And yeah, it might cost you $130,000 today, but because that one decision, because you transferred money that's no longer in your control, you're no longer able to see it. This is BetterWealth with Caleb Guilliams. Hey everybody, it's Caleb Guilliams here, and the Raptor Aircraft just took flight, and this is something I'm really excited about because a friend of mine told me that I needed to check this company out, and before they even were really a thing, I put down a $2,000 down payment to get in line to be one of the first, and when I say one of the first, within the first 1,000 people that could have access to getting this aircraft. And so if you want to learn more about the Raptor Aircraft, I'm going to put some information in the description below. I believe it's going to be the Tesla of the air. And since I already have the Tesla, I thought, why not learn to get my pilot's license and figure out how to fly? Lots of cool things there. But the reason I'm doing this video is I know there's a lot of people excited about this. There's a lot of buzz. And so what I wanted to do is I wanted to get a video out to talk to you about how I would pay for the Raptor aircraft, because I've written a book called The And Asset, which is really ironic because I put this down payment down on this plane before I wrote this book, but I knew about the strategy, and I want to just walk you through different ways that you could pay for this Raptor aircraft. So what I'm going to do is I'm going to go over to my computer screen and quickly talk about 3 different approaches that you could do, and I'm going to share what I'm going to do as it relates to when I get to purchase my vehicle. All right, so you can see me. I'm going to smooth this down a little bit. So essentially the Raptor aircraft right now is planned on being sold for $130K. Now, like everything, I do own a Tesla, and they advertise it to be a $35,000 car, and I end up paying almost twice that much because there's a lot of add-ons. So I don't want to be ignorant and say that it's only going to be $130,000, but I'm going to be optimistic and say $130,000 for this example. And there's really a couple ways that you can pay for this. Now, at the same time, I run a business called BetterWealth, and I'm a big fan of helping people save money. I think we have a savings crisis on our hands. You can see in the description below, if you want access to our calculator to show you if you're saving enough to be financially in balance. We just have a savings crisis on our hands, and we find that 98% of people that come to us are not saving nearly enough money. But with that point aside, I save over 6 figures a year. Okay, over 6 figures a year, and I put it into life insurance. Now, why in the world would I put it into life insurance? I put it into life insurance because I know how to utilize that contract to best be able to grow my money, control it, and do a lot of amazing things. So in summary, I'm essentially this person right here, and I'm putting a bunch of money into a contract, and this contract is partnered with a massive insurance company. And so I get a lot of special benefits to my money when it's put into the contract. And this company is I'm part owners because that's how the contract's set up. But essentially what I'm doing is I'm minimizing the insurance cost, and I'm maximizing the cash. And what that allows me to do is that allows my dollars to grow with a lot of different tax advantages securely and growing for the future. Now, the growth rates in around 4% long term, but that's a tax-free 4%. That's after fees and all that stuff. So it's like an equivalent to like a 7 or 8%, at when you include everything in there. And it's also a really conservative way to store my capital. So I don't see this as an investment. I see this more as a great place to store capital, to purchase things. And then the other thing that I love about this is my money will grow, and I can collateralize my money, or I could leverage my money and have my money continue to grow at the same time. So it's just a vehicle that I use to save money, get tax advantages, get my money to grow for me the long term, but still have access to use my capital to buy things like planes, invest in businesses, and do a lot of cool things. So because of this, there's 3 ways that you could do as it relates to purchasing a aircraft. Number 1 is you could pay cash. And the problem with paying cash, well, let's talk about the good news. The nice thing about paying cash is it's super convenient. In some cases, like, you don't have to have a ton of records on it, and it's quick, and you don't have to pay interest. So a lot of people love this because you don't have to pay interest. But what I see, this being a money nerd, is I see all the money that you're losing. So, for example, if you have $130,000, and just assume that you could earn 5%, this could be 10%, this could be 15%, this could be 4%. It just depends on what confidence you have for your money growing long term. And you look out just over 30 years, that $130,000 purchase, that one plane, that Raptor that was supposed to be economical, now costs you over $500,000. And because I'm so young, I look at this long term, say what over 50 years, it's $1.4 million. And I'm only assuming that you can earn 5%. I do that because that is very conservative base numbers that our clients are getting without utilizing their plan to maximize the cash. And so paying cash is convenient, it's quick, but I would make the argument over your lifetime because of opportunity cost, you're missing out on a lot of the cash benefits. And yeah, it might cost you $130,000 today, but because that one decision, because you transferred money that's no longer in your control, you're no longer able to see it. The second way is the and asset way. And I wrote a book on this. The and asset is essentially a way to overfund life insurance. And just like I said, and you can borrow against it. If you want to learn more information, you can check out the link below, or you can check out my website, betterwealth.com. And essentially what I'm going to do is I'm saving lots of money into this policy, and it's growing for the rest of my life. I'm getting lifetime compound growth, but I'm able to control that money, and I'm investing in businesses. I'm doing a lot of things. But one of those things that I could do is I could borrow against my money and buy the Raptor. And there would be some interest cost associated to that. Like right now, the cost of borrowing, not my money, but the insurance company's money, allowing my money to grow is right around 5%. And so what I'm going to do is I'm going to look up like what a payment would look like. And if I take a $130,000 aircraft, and let's say I am borrowing over 60 months, we'll say I pay it off over 60 months, and let's say I have to pay 5%, that payment is $2,443. And what I'm going to do is I'm also going to pull up my handy dandy calculator, and what I'm going to do is I'm going to take this payment of $2,443 and I'm going to multiply it by 60. And you're going to get a total cost of $146. So I'm writing this down. If you're listening to this, it might be a little hard to follow. But this aircraft, instead of costing me $130,000, it's costing me an additional $16,580. Okay, you see this. This is the interest that over 5 years I'm going to be paying the insurance company, but my money's growing the whole time, and it's going to grow the rest of my life. This is a strategy that I'm a big fan on. So so I'm going to pay $16,000 plus in interest, but my money is, I'm going to just move these calculators around. My money is able to grow, and over 30 years, let's say over 20 years, it'll be worth $344,000. Over 30 years, it'll be worth $561,000. Over 40 years, it's going to be worth almost $1 million. And this is just the baseline. This is not. We teach a lot of our clients how they can make multiple dollars using this strategy. And so this is just a way. Yes, I'm paying a little bit more money in interest, but I have a system. I have a foundation that's able to do some amazing things. And there's a lot more that I could go into. And if you're looking for more information on the strategy, you can check out some of the videos below, and in the description I have a lot of information about this. The third way, and the way that I'm probably going to do this because I just think it makes the most sense financially, is I'm going to use my and asset and a bank. Because the and asset is essentially a place where I can put money, I control it, it grows tax-free, it protects myself, and it just gives me a ton of options. But if a bank would finance this airplane, I would much rather stay in control over my capital to be able to leverage it for things that are actually an asset. I'm not saying that this plane is not an asset. It is an asset, but it's definitely not going to put cash in my pocket. And in fact, it potentially will depreciate over time and become less valuable. And so I want to free up my money to continue to invest in businesses, people, opportunities, giving myself opportunity to do amazing things. And so So what I'm going to move these calculators down here. So what could happen is I'm doing the same strategy, but instead of borrowing against my money using the insurance company's money, I'm going to go to a bank and say, would you lend me money at certain interest for this time? And let's say the bank will say, yes, we'll do that. Instead of 5%, they'll do it at 4.3%. Well, essentially, that's the wrong calculator, but essentially I will just get my payment down lower, $2,403. And if you take your calculation and you take $2,403 and multiply it by 60, you're going to get a total of $144 total for that aircraft. And so which is less interest. It's $14,000 worth of interest, and $14,180 worth of interest. So it's a little bit cheaper, but more importantly, your money maintains in control. And so the reason I'm making this video is a lot of times people say buy cash for things, and that's just the cheapest way to do it. Or they'll say things if you're going to buy a asset that's depreciating, buying cash is the way to go. And I think what they mean is a lot of times if you pay cash for something, you're not, like, obviously I would not recommend getting a plane if you didn't have the money for it. But the question is, if you have the money to buy a plane, what is the best way to go and purchase that? Paying cash definitely sounds the best, but I think it's the most costly over your lifetime. Using the and asset strategy, I think, is an amazing strategy and gives you a lot of control, gives you the control like cash, but lets your money grow the rest of your life. And I think a combination of having an and asset and also having a lender that sees the value in this gives you even more control, more options, and the ability to own a plane, but the ability to have your money continuing to grow for the rest of your life. Thank you so much for listening to the BetterWealth podcast. It would mean the world to me if you could hit subscribe, leave a review, and share this with the people that you know and love.